Hello everyone, my name is Vikas Agrawal. I'm the founder of AIF and PMS Experts India. So AIF is your alternate investment funds and PMS is portfolio management services. So we are emerging as one of the largest platform in India for investing in alternative investments and portfolio management services. To know more about it, you can also visit aifpms.com and you can also book a call with an expert and you will get the complete understanding of this whole alternative space. Now it's a again, a very special day because with me I have Mr. Ankit Aggarwal. Well, Ankit brings about almost 16 years of experience on the table and he has recently taken over as fund manager for private equity at Abakkus Asset Management. Well, Abacus doesn't need any sort of introduction. Most of you who have joined here, I've already invested in Abacus Fund. So Abacus as an organization has been into CAT 3 IFs, also into PMSS, and they bring about almost 5 years of stellar performance in terms of track record. Now, after completing 5 years, the organization decided to lay their hands down in or opportunities in unlisted space as well, because you know the fact that as we move from $3.5 trillion to next $8 trillion journey, you will see many unicorns coming up, and Abacus is keen to participate with. So, idea is to basically utilize the and leverage the strength and the capabilities of Ankit Aggarwal because previously, before joining this company, he used to work for Kotak Alternate Investments, where he was managing a fund of more than 2,000 crores and have successfully got many exits while managing the fund. So he managed the funds in India and also in US. So he brings about complete understanding because what we've seen is that many unicorns coming out of developed economies more from US per se, and now the same trend India is also picking up. So I'm sure we would be able to utilize, his capabilities to basically shape up the performance of this fund. So without any further ado, I would now hand it over to Ankit ji, and from there, maybe Ankit, if we wish to start, over to you. Thank you so much.
Great, Vikasji. Thank you so much. And I really appreciate AIF and PMS experts for inviting us. It's a pleasure for us to be part of this call. So I'll quickly tell you about Abakkus 428 Opportunities Fund. So it's our maiden offering, a maiden Cat 2 offering. Otherwise, we've been very active on the public market side, both through AIF as well as PMS. So that's basically like one may wonder the name of the fund, how we've come up with the name. So when we look at India as a country, right, we've taken close to about 75 to 77 years to achieve today's $4 trillion GDP mark, right? Which is obviously India has grown extremely well as a country. We have done extremely well. But what we achieved in the last 77 years, we expect that to be replicated in that sense in the next 7 to 8 years itself. So so basically another $4 trillion of GDP will be added in the next 7 to 8 years. This is going to create a lot of opportunity for us as a country, and we want to back entrepreneurs and companies that will benefit from this growth of India going from 4 trillion to 8 trillion. So that is basically the focus. Now, what are some of the factors which will help India achieve this growth? So one is a stable democracy. We've had a very good government with Modi ji, and he's come back to power. So we foresee a lot of stability in terms of democracy. In terms of a country, our biggest advantage which we have is domestic consumption. So that's another big advantage. Then we have a very young population, unlike some of the countries like China, etc., which are facing a lot of aging population. We have a very young demography. So that's a big advantage for us. And I think the focus both as both government as well as the private sector, there has been a lot of focus on the digital side as well, which is also helping us achieve a lot of this growth and will enable us to continue growing at a very good pace. So as you all know, Abacus, we manage close to about we manage now a lot more capital. In fact, it's actually updated. So we manage north of 35,000 crores, both on AIF as well as PMS side. As you know, Abakkus, Sunil had started this platform in 2018. We are very glad and very thankful to all the investors who have backed us also, and we've provided good returns also to our investors. So he was earlier the CIO of Reliance Nippon Life Asset Management. My background, Vikas did anyway mentioned. So 16, 17 years in private equity, primarily invested in India, but also in the US and Israel. Computer science engineer from Mumbai University and Wharton. I did my MBA from Wharton School in the US. So that's basically my background. In terms of the philosophy, how we look at investing, the framework which we plan to use even on the private equity side is the same as the public market side, which is fundamentally driven companies where we'll do bottom up research and prefer add those companies to our portfolio. We are happy to sit out of very hot sectors, and we want to identify companies which meet our investment framework where we can generate strong returns for our investors. In terms of the feature, we are looking primarily on mid to late stage companies where we think the IPO, there will be a IPO event in about 6 months to about 2.5, 3 years. We'll also look at secondary opportunities in case there are funds which are coming to end of a life. And we'll also look at some pipe transactions where growth capital is needed. But one thing I want to highlight to everybody, the way we are approaching this market is actually, we are very clear that we want to invest in only profitable businesses. So there are a lot of times companies are still sort of in that growth stage where they are figuring out the business model. Unit economics are not very clear. People are still figuring out, still burning a lot of money. Our capital will not go towards funding this burn. Our capital will only go towards growth of the company. And that is a core focus for us as investors. So that's our core focus, and that philosophy has worked very well for us on the public market side. We intend to do the same also on the private equity side. When you look at India's investment landscape, we believe that early and growth stage actually has a lot of foreign as well as domestic funds, VC funds and early PE and so on. So there are a lot of funds and a lot of capital is available there. But over there again, the capital is going more towards funding the losses of the businesses because they are still figuring out the business model. And on the other side is the listed market, which has a lot of capital which is coming in every month through SIPs and direct investments. But we believe that how the markets have performed over the last 4 to 5 years, it's difficult to replicate those sort of returns in the future. So we felt that now was the right time for us to invest in the mid to late stage where we are getting companies at much better valuations. The type of companies we are looking at, actually, maybe one may say they're just boring businesses, right? Just growing, but there's nothing like very hot about it. So we are actually looking at a lot of companies which need that capital and which want that growth capital before they can go for the IPO. In terms of the advantages, biggest advantage is the business is proven, unit economics are proven, business is profitable. From an investor standpoint, the biggest advantage is the favorable risk-adjusted returns that an investor may get. So I think that's another advantage for people for doing late-stage investing. In terms of the value proposition, companies are able to actually get that growth capital before they are ready for their IPO. There is also that strategic advice and guidance that can be provided by us to these companies. And for promoters and private equity funds, it's a big advantage because they can get certain amount of liquidity. There is a certain amount of liquidity can be provided to them, and because they have lock-ins in place. We being a Cat 2 fund, if I hold any asset for more than 6 months, I have no lock-in. So by the time the company goes for a listing, I am free to sell my shares on day 2, day 5, whatever day, right? I'm free to sell the shares, and therefore I'm not forced to do a OFS or have those shares locked in. In terms of our fund focus, we are looking at at all sectors. These are some of the sectors we look at: infra, manufacturing, consumer financial services, healthcare, and so on. Right. So we look at all the sectors which will benefit from India's growth. Typically, we'll invest sort of anywhere between sort of 50 crores to 150 crores per deal. And we intend to take a minority stakes of like low single digits to up to say 20% in each of these companies. And we believe that that's a good market to be in because there's not too many people looking at those sort of companies. We already have a very strong pipeline of companies that we are looking at. So there are about 5 to 6 companies already in various stages of evaluation. Two are in the advanced stages of diligence. So two transactions are exclusive discussions, but in one in the advanced stages of diligence already, where it's a mining EPC business, good company growing at a very fast pace, order book visibility of about 5x of that last year's revenue, with double-digit EBITDA margins, good return ratio profile. So overall, quite good. The other business is a aluminium engineering, high-end aluminium engineering products company, which is supplying primarily to aviation, defense, as well as renewable sector. Again, double-digit EBITDA margins, and the company again has a good return ratio profile. So, and we're looking at couple of companies in financial services space, one in the defense space, and so on, right? So again, across the board, when we are looking at companies, in terms of Abakkus advantages, the 3 pillars, right? So the first pillar is we have a lot of experience on the public market side in equity markets. Therefore, we have a very strong relationship with a lot of the investment banks as well as their ECM practice. A lot of the investors in our various AIFs and PMS happen to be corporates and family offices. Through that, again, we get a lot of deal flow. And we have a strong network even in private equity and the VC market. So that's another avenue for us. So there is a good mix of deal flow which we end up getting, which is a big advantage for us. So that's that. The other one is the investment framework. So the MEETS framework has worked very well for us on the public market side. We intend to use the same also on the private equity side. So we believe in this space, you need that public market approach also. You need that public market lens also when you look at these companies. So you need to do private equity diligence, but you also need to ensure that you look at it with a public market lens. And last but not the least is timely exits for investors, which we intend to provide to all the investors. So that's about it, Vikasji. If you let me know if there are any other things which we want to discuss, happy to answer those for you.
Thank you. It was great presentation, a lot of insights. Ankit, a couple of questions on behalf of investors. So, first question is, what's your views? Where are we headed as an economy? We've seen 50 unicorns coming out. What do you think next 5 years or 10 years? What do you think is going to happen in India? And what is the trend that we are picking up from developed economies? Over to you.
Yeah, no, so we are actually seeing, one fundamental growth. When you look at global markets, India is actually one of those bright spots where India continues to grow. That's driven by a growing population, improvement in productivity as well, right? Those are the major factors for GDP. So we are actually one of those economies which is doing quite well. So that's a big advantage for us. Therefore, we are seeing a lot of interest in India. Global funds want to allocate more capital towards India versus and reduce, say, their exposure to countries like China. So I think it's a big advantage for India as an economy that we are getting that much more capital, and that will help us also grow. The government has also been a fantastic government. Focus on PLI as a scheme has helped a lot of manufacturing companies. So the type of companies we are looking at, obviously, there will be a lot of new age companies which will grow, but at the same time, there's actually a very large untapped market of companies which are going to benefit from India's growth of $4 to $8 trillion. So I think there are many more stories that we will see, and They may not be stories which may be just new age companies. There will be a lot of, in fact, I believe there will be a large number of companies which will come out, which are more manufacturing led, infrastructure led, financial services led. May not be new age companies, but again, good quality businesses, good entrepreneurs who want to who will participate in India's growth. So it's a great time for people to be investing in India.
Right. I also understand. Thanks for sharing that, first of all. I also want to understand that from a valuation point of view, how fairly they are placed now vis-a-vis the listed companies in the same category. Over to you.
Yeah, so when we are looking at these companies, we are actually finding a lot of these opportunities at much better valuations. Say, again, it depends on company to company, sector to sector, but the discounts are like, again, they could be half the valuation, right? In terms of some of these companies, because again, to be honest, there's a lot of demand for these sort of companies, and when they go for the listing, but prior to listing, there are not a lot of funds which are focusing on this segment. And I think there are high quality entrepreneurs, which who may not be in, who may, if I may say, they're just in boring businesses, right? These are like good businesses growing quite well, but there is nothing like very hot about them. So it's not like a very hot sector. So a lot of times they tend to get ignored. I think that's where the opportunity is for us to back these companies in their growth journey. And once they go for the listing, then accordingly we'll try to exit these companies and provide strong returns for our investors.
Sure, I got that. I also want to understand from you, how do you deal when you have, your euphoric situation? Like, for example, recently we saw what is happening with Byju's, and they were in the dilemma that, whether to come out with IPO or to continue with the valuation. And then later on, we got to know that the entire balance sheet is kind of manipulated to some extent. Now,
Correct.
so there's so much of valuation, chasing valuations and, losing money. So how do you read that? Over to you.
Yeah, so to be honest, the type of companies we are looking at are not these sort of companies, right? So for example, for one may say, will you like Zomato type of companies, we may miss out, but we'll also avoid companies like Byju's, right? So oftentimes, see, there's a lot of cyclicality also in these companies. So if you remember, in 21 there was a lot of mad rush to invest in these sort of companies. Then there was a complete like people used to call it funding winter, right? The terminology is called funding winter, where then these companies were getting no capital. Now again, things are looking sort of heating up for these sort of companies, right? So I think the type of companies we are looking at, we are not seeing those sort of valuations. And anyways, you know how Abacus works, right? We don't like buying companies at 100, 200, 500 PE. Those are not the type of companies we look at. We don't value companies on revenue basis because they are not profit making. Those just don't fit our investment framework. And I think that's one big advantage which we have, is that we will stick to what we understand and ensure that the returns which we generate are good for the investors.
Sure. But if that is the case, then because I was just looking at the data out of these 50 unicorns that I'm referring to, most of them are maybe new age companies. Most of them. You don't want to talk about Grow, you want to talk about other, similar sort of companies. So don't you think then that it would be a left out situation for you as a manager? Over to you.
No. So actually, I would caveat it that unicorn is obviously a global term, right? It was, I think, coined, if I'm not mistaken, like early 2010 or 9 or something. I'm forgetting exact year. So it was coined at that time because वो $1 billion company was like, भैया unicorn खड़ा कर दिया. ये तो कभी होता ही नहीं है, मतलब लाइफ में एक बार होता है ना. So I think that was the way people termed these. But there are so many unicorns. You look at the type of companies in pharmaceutical, chemical, in industrials, manufacturing. There are so many good quality companies. They're just, see, they're not defined as unicorns because they are not like new age companies, but there are very, very solid businesses which will grow in India. So they may not be termed as unicorns, but मैं कहता हूँ जिसका अगर $1 billion मार्केट कैप अगर लिस्टेड कंपनी हो जाती है हमारी कोई, एंड बिकॉज वो न्यू एज नहीं है, तो ये थोड़ी है कि वो उसका वैल्यू कम है। वो तो बस थोड़ा, ये वो मैं मानूंगा कि द थिंग इज दैट द कंपनीज आर नॉट इन वेरी हॉट सेक्टर, सो वो लोगों को लगता है यार ये तो नॉर्मल बिजनेस है, बट आई थिंक दे आर यूनिकॉर्न इन देयर ओन रिस्पेक्ट, सो आई वुड caveat it with that.
Sure. The other thing is, Ankit, these businesses are, when you look at the listed space, market decides their valuation. But how does it work in case of private equities? Because who decides these valuations? What are the parameters that you look at? And how do investors get to know that this is well valued at a fair valuation? And how do they get to see what is happening at the end of the year? At Abakkus, would you be sending some details, and who will be doing these valuations, auditing, etc.?
Yeah. So when we evaluate companies, then we obviously have the same fundamental way of evaluating companies, right? कि कंपनी का क्या कैश फ्लो है, हाउ इज द रेवेन्यू ग्रोथ, हाउ इज द EBITDA growth, how is the PAT growth, how are the margins like, how is the return ratio. So all those parameters come into play. For us, because we'll be working more closely with them, so we'll guide them also through that journey, better reporting, because see, a lot of the companies may not have other PE funds also. So our aim will be to guide them through that journey. Once we invest in a company, we will obviously be sending quarterly communication to our investors on how the companies are doing, and so on. And the valuation, let's say मैंने कोई चीज 100 रुपए में ली, and if let's say I take it at 100 rupees, and then if tomorrow the company has grown very well, there's a third party independent valuer who will come in and say, okay, now this 100 rupees is worth, say, 120 rupees. So that is a third party valuation which is done. He may just say that, okay, no, the value is 80 or 90 rupees, and he may value it at 80 to 90 rupees. So that's a third party valuation who will do the valuation of the company, each of our company, like our stakes, and provide a valuation report.
So who is the third party in your case? Are they appointed now?
So no, we've not appointed because we are still fundraising, but it will be of a third party of like a independent valuer of repute, for sure.
Yeah. So you're saying that so they will have enough understanding of the domain, and basis their own parameters, they will decide, and they
Yeah,
will
yeah.
not get influenced by anything. They will have their own metrics in which they decide the valuation and then give it to you, and then you will decide whether to go ahead with the same valuation or you may want to discount further. Is that correct?
No. I don't think. See, because I want to remove the subjectivity. Because one may say, "Arey, why are you reducing it, or why are you increasing it?" Right? So whatever the third party agency decides is the valuation we share with the investors. Because see, it is once, see, the moment it lists, then to it's mark to market. Whatever the market price is, it's the valued based on that. But before that is the point, right? That a third party valuer will value it.
Okay. And what is the kind of tenure that you look at? For example, now that we are raising funds and will be deploying, how much time you think you'd like to be with the company, and then investors will start getting the money back in their account?
So we have a commitment period of about 36 months, but we think we'll probably deploy this close to about 18 to 24 months in terms of funds. In terms of, sorry, what was what was the other question?
So I'm saying that, for example, what is your tenure that you look at? For
Huh.
example, you've identified us as a company, and you're giving
Hmm.
money backing up. So what is the time frame that you look at?
So we think it'll be close to about 6 months to 2.5 years, where we'll invest, and then the company goes for a listing, and then we start selling our stake. So that's typically what we are looking at. We are saying 6 months to 2.5 years before IPO, and then I decide IPO, if I want to sell it on the day of IPO, before IPO, after IPO. In fact, one more thing is, now the taxation with the latest budget, it's at par with unlisted, with the listed side. So I can also sell it in the unlisted market also. So that's another thing.
Or maybe the promoters wants to buy back from you, they can do so.
Yeah.
Okay. So you will decide independently based on the valuations whether
Exactly. My intent is to generate the alpha for the investor. So if let's say some PE fund comes and says, I want to buy this at a much more premium than what even I was anticipating the markets will give it, then I'm happy to exit it, right? And taxation is similar, so should not be a problem.
Yeah, but mostly your approach would be to identify those promoters who have vision to get their company listed in 2 to 3 years time. So initial two
Correct.
years time of the drawdown, and then 2 to 3 years time of the time horizon that you will be backing up, and then post 5 to 6 years you will see you will start exiting from those businesses. Is that correct understand?
No, no, no. So in fact, what I would say is, let's say I invest on day one in say 6 months to 2.5 years, let's say 2 years. 2 years, the company goes IPO. Then, if I'm getting a good valuation, I sell it and I start returning capital back to the investor. If, for example, for some odd reason, market is not understanding the business or numbers were a little weak in one quarter, then the stock is down a little bit. I'll wait. I'll wait till the numbers improve, and once it reaches my fair market value, then I'll sell the shares.
Oh, then in that case you will start returning from third year onwards.
Yeah,
Perhaps.
yeah, yeah. Our intent will be to start returning much faster. But you understand, it's a portfolio. So some may IPO slightly early, some may get will be slightly later.
But
So it
no
depends on the
intention of
thing.
redeploying in third year. No intention of redeploying the money from
नहीं
there.
नहीं by third year तक तो we will not do that. I think the provision which we have is during commitment period. So maybe initially, if there is some company which we get our money back very soon, then we may sort of hold it, like as in redeploy it. But intent will be to start returning capital sooner.
Okay. So for the benefit of our investors, because they raise this question, how does the return gets calculated? So here it works on XIRR, IRR basically. So from
Correct.
the time that you've given money to the fund manager, and as soon as they exit and return the money, so that's how the returns are calculated. From the time that they've taken money and then they return the money. So that's called IRR. Okay. Now coming back to other quick questions. So, which are the 2, 3 sectors that you think you will be focusing on as a fund manager in this fund?
Because we are looking at all sectors, to be honest. The approach is bottom up. Right now, we are seeing some pockets of value on the financial services space. But again, I'm saying, to be honest, manufacturing also, I'm seeing a lot of opportunity
True,
because nobody's really sort of looking at those companies very aggressively, right? I think that's a big opportunity in India itself, I think.
true, true. Even on the listed side, we saw many companies doing fantastically well on the manufacturing side. So, what you rightly said, both the sides there is enough and more opportunities for everyone.
Yeah. And again, we are sector agnostic, right? So for me, I want to ensure that I'm looking at companies across sectors. And luckily, one big advantage which we have is we have a public market team also. So they also have a view on companies, sectors, and so on, right? So that's another advantage which we have as a house, that we have a active public market team also which evaluates deals. Sorry, which looks at various sectors. So we have a strong sector understanding also, that once this company lists, how people will perceive it and so on. So that's a big advantage which we have in our fund.
Okay, there's one more question which has come up. I don't know if you're comfortable taking it, saying that you've already invested in your emerging opportunity AIF and PMS. Then does it make sense for me to consider this offering and get onto the unlisted side? Would you like to answer or I should answer, Ankit?
Nini, I think again, see, I again don't know the person and I don't know the portfolio, but I feel public markets have obviously given a very strong return. I think this is a way to diversify for people to have different allocation in a different asset class, which we believe will generate a 6 to 8% alpha over public markets.
Well
So
said.
so I think it's a allocation basis the person and their portfolio, how it is really sort of catered to. But we think it's a good proposition to look at this fund because it's providing you access to a different market which most people don't have access to.
Yeah. Just to add here is that, while you are looking at diversifying your portfolio, but you also need to keep this in mind that generally the tenure of these funds, private equity funds, are more than 7.5, 8 years. Please understand that. And you have to have a sort of patience to digest and stomach the whole thing. Because the valuation at times in the listed space, you get to see on a daily basis. कि मैंने 1 करोड़ रुपए डाला, आज मेरी उसकी valuation. But in these kind of fund, that's my experience of last 20 years, is that most of the things gets calculated when fund manager decides to exit. An exit can happen 3 years, it can happen in 5 years, and sometimes it happens that the first company gets exited to the last month of the fund. So you get to see the valuation only after 6 years, 7 years. So my submission to all of you, those who are sort of considering this as another offering, please talk to your advisor, and then take the decision, because you need to know all these things. What to understand, Ankit, from you is, so how's like you talked about sourcing the deal. Now, when you source the deals from, say, ICICI or any company, because they are bankers and they work closely with them, uh, and what kind of team you have who will do the first-hand research? When I say first-hand, in the sense that verifying the entire data and then taking your own call in terms of valuation. So, how the team is shaping up at Abakkus?
The team is shaping up well. There will be a 3-member team, including myself initially, as we are adding portfolio companies. And then eventually we'll scale it up as we have more portfolio companies with us, because then we'll have to get quarterly and monthly numbers depending on the company. So that's how we are building the team. Again, team will be a mix of sort of investment bankers, private equity professionals, or people with consulting experience. So it'll be a mix. So it will be an independent team that will focus completely on the private equity 4 to 8 opportunities fund.
Okay. And the other thing that I want to understand, Ankit, is you talked about sectors, you talked about sourcing the deal, the team shape up, etc., etc. But you have almost now 15, 16 years of experience backing up these businesses, and have had good or bad both the experiences. You've seen COVID times, and more than that, post COVID, you saw a consolidation in the private equity space. So tell us 2 or 3 things which can go against the whole thing, or if I don't say against, then can go haywire during your tenure of the fund. Over to you.
So I think that's a good question. See, things can always go wrong, right? But one thing which I think is just from a practical aspect, right? Companies which are, see, IPOs get delayed, right? And therefore the liquidity may get delayed a little bit. But to be honest, see, there are a lot of funds in that early to mid sort of stage, right? Where there is a lot of capital. They have a long tenure also. They can hold companies for 10, 12 years also, right? Ours is a shorter tenure fund. So if a company is not very clear if they want to go for an IPO, then to be honest, they will not even come to me, right? It's a self-selection which everybody has. They know that they want to go IPO. They want Abakkus name to be on the cap table. They want that we guide them through that journey of going from unlisted to listed. So it's also a self-selection bias, which not bias, basically self-selection uh, process which they follow, that they want to come to us because they also want to go for an IPO. They want that guidance. Now, obviously, things not 100% will go according to the way you want it. But the good part is, because we are looking at these profitable businesses, we feel it is likely that we will find exits, because some other private equity fund will be happy to sort of take on these companies, because they would have also grown much more by then. So I think that is where we think that risk of IPO delays, etc., are there. But the self-selection which the companies will have, and also with us, with our focus on profitable businesses, I think that mitigates the risk to a certain extent, to a good extent actually.
Sure. So given the framework in which you operate, at what stage you would like to come into play, as in startup or stage 1, 2, or maybe the last stage closer to the IPO?
Yeah, no. So we actually are not looking at as per stage, right? Because for us, early companies so will anyways not make sense. They will not go IPO. We are looking at companies which will mainly list on the main board itself. So that's another point.
So
And
no
the
SME, no SME sort of
we are
company.
not really looking at SME type of companies because that becomes again we'll see, right? Markets have given some very crazy returns, right? But those are we don't know how that market will be next year, right? SME exchange, I have no idea.
Right.
But we are looking at businesses where there will be a fundamental demand by people for these assets. So I think those are the type of companies we are really looking at. And in terms of stage, I think, see, there are companies which may be unlisted for the longest time, and some companies which may be very small, but they still go for their listing. Our intent will be to invest in companies where there's a plan of company going IPO in say 6 months, 3 years. Those are, I think, that's the way we are looking at these companies.
Okay. So irrespective of what stage they are in, depending upon the valuations and other parameters, you would be evaluating on independently. And
Yeah.
then once you like the business, then probably you will have the discussion. And you're saying that, so what is the minimum? Is there a threshold that you've kept for your organization that this is the kind of revenue that I would look at? And because those companies will come in the main board directly and not in the SME. Anything,
Right.
any minimum
The
threshold?
revenue se zyada, I would say maybe more like EBITDA. I think where we think there's a clear visibility of at least 100 to 200 crores of EBITDA. Uh, Obviously, it can be much higher than that. But on the lower side, I think we'll want that visibility to happen because when the company goes for a listing, then we believe that value can be created over there.
And how important you think is the founder of those businesses, and what kind of metrics that you put to evaluate them, that what vision they bring on the table?
See, one is we are looking for people who are really sort of growing, who want to grow, they want to achieve a lot more than what their current state is. A lot of times, again, to be honest, most funds are not looking at these companies, right? So those are the type of companies we want to ideally find, and if the businesses have been profitable for many years, it means that the company is very level-headed. They are not in that in a urgency to just show growth and just burn all the money and focus only on marketing and not on the operations and so on. So I think we are looking at level-headed, passionate founders who want to grow and who we think will benefit from India's growth in the next 7 to 8 years.
Okay, maybe last two three questions and we'll conclude the session.
Sure.
So the other question which has come up is, do I make more returns in the unlisted than the listed one of Abakkus funds? Would you like to answer, or I'll
Yeah.
answer?
Nini, again, I'll just say the same thing. I think I mentioned that we intend to generate a 6 to 8% alpha over public markets. We think public market returns will will not be what they were in the last 4 to 5 years. I think that's difficult to replicate because markets have gone up a lot and they are much more expensive than what they were, say, 4 5 years back. So therefore, I think it is better to uh, taper our expectations also accordingly. That those returns will be difficult to replicate. But I think but still, obviously, public markets will be your majority of your allocation. But from a again, wealth managers are the right people to guide, but we think some allocation also on the private side is a good way for people to improve their take that allocate that capital, little more capital, allocate some amount of capital to unlisted to improve their overall returns.
Yeah, I would like to add here is that, as a wealth manager, what I strongly believe is that please look at this sort of offering more from a diversification point of view, and get your input corrected in the sense that while performance is an outcome, while the fund management team is internally targeting to generate additional alpha of 6 to 8% in the next 7 8 years, But these are outcomes. You never know. You never know what kind of FPI monies will come in the listed space, or what kind of FDI money will come in the unlisted space. What is more important is that you get your input correct, in the sense that you have to have good asset management company like Abakkus coming in and managing your money both on the unlisted side as well as listed side. Listed side, they've already demonstrated their capabilities in terms of delivering the highest possible returns in your portfolio in the last 5 6 years. Of course, credit goes to market, what Ankit rightly said. But at the same time, you need to also look at that. When you are investing, look at from an input point of view, that when you will have a best quality companies in the private equity space, and you will have similar best quality value, well researched companies in the listed space. So unlisted and listed both. And then see to it that you allow those businesses to grow. And there would be a possibility that at times your listed will do better during a year or so, and at times you will see that the unlisted performance is really bouncing back. So very difficult for anybody to predict that, at the beginning of the fund. But yes, eventually the attempt is to see to it that unlisted, the approach should be that eventually it should outperform the listed businesses, is what I can say. So with that, we'd like to conclude the session. Thank you so much again, Ankit. It was great interacting with you. And on
Thank
behalf
you very
of
much,
the
Sachin.
IF and PMS Express India, wish you all the very best for your fund, and please continue to generate returns for our investors. Thank you.
Thank you very much. Appreciate it. Thank you. Thank you, everyone. Bye.